The market's on edge. The Supreme Court just heard arguments that could shake global trade. The U.S. has a 10-year Treasury yield that keeps pushing higher, tightening pressure on stocks, crypto, and housing market. And get this, the median age of a first-time homebuyer in America just hit 40 years old. That's not just a stat, that's a generational red flag. If you've been wondering why it feels harder to get ahead, this episode is for you. Because behind every headline, there's a signal. What's up, family? It's Coach Masi, and you're locked in to the Daily Hodl. I'm so happy you're here. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, stay disciplined, and of course, stay ready for opportunity for your pocketbook. Let's dive in. All right. Today, the U.S. Supreme Court heard arguments in one of the most important trade cases of the decade, one that could reshape how America handles tariffs and presidential power in setting trade policy in the future. At its core, the question is this: can the executive branch unilaterally impose sweeping tariffs in the name of national security? Or should Congress have to approve those moves? And why does this matter to you? Well, because tariffs affect everything, from what we pay at Target or Walmart, to what companies like Tesla and Apple pay for components, to how global partners view business with the United States. So, if the court rules that President Trump has too much unchecked authority in this matter, it could limit future trade wars. If it sides with the administration and President Trump, it could open the door for more protectionist policies. Either way, markets are watching closely. Trade equals supply chains, and supply chains equal cost. And cost equals, well, it could be inflation or deflation. And either way, everything from your grocery bill to your crypto portfolio is affected. So yes, a court ruling can ripple through basically every wallet in America. Now, let's talk about the quiet monster in the room, the 10-year Treasury yield. It's been climbing again, inch by inch. And that might sound boring, but it's not. This single number in general, tells you what basically the cost of money is in America. When the 10-year goes up, everything gets more expensive. Mortgages, business loans, credit cards, and it sends basically a message to investors. Risk is rising. Right now, higher yields are signaling that investors expect either A, inflation to stay sticky, or B, the Fed to keep rates higher for longer, or not cut, or C, government borrowing to stay out of control, forcing the market to demand more return for taking that risk. And if you zoom out, you'll see this exact scenario playing out across history. When yields rise too fast, liquidity dries up. When liquidity dries up, assets like Bitcoin, tech stocks, and real estate start to feel the squeeze. You can see it right now. Bitcoin is holding, but altcoins are bleeding. Tech is bouncing, but volatility is back. And investors are moving from growth to safety. Even in real estate, you have more buyers than sellers right now. And that's because of the rates, too low for too long. You see, the key here isn't fear, it's understanding cycles. Higher yields mean we're late in the tightening phase. So what comes next? Opportunity. For those who stay disciplined, you see, here's a stat that even shocked a regular veteran economist like myself. The median age of a first-time homebuyer in the U.S. just hit 40 years old, the highest on record. To put that in perspective, in the early 1980s, it was 29 years old. By 2010, it was 32 years old. Now it's 40. So what does that tell us? Well, it means that entire generations are being priced out of homeownership. Student debt, rising home prices, stagnant wages, and now, 6.57% mortgages are keeping younger Americans from buying their first home. That's not just an affordability problem, it's an economic imbalance. You see, homeownership is one of the main vehicles for building wealth in America. If fewer people can buy homes, fewer people can build the equity. That slows spending, growth, and long-term stability. Meanwhile, institutional investors have been buying up entire neighborhoods. Hedge funds, REITs, and corporations are turning homes into rental portfolios. It's not paranoia, it's data. And that shift means more Americans rent longer, save less, and retire later. The ripple effect hits everyone. Construction slows, home improvement weakens, small businesses feel the drag. The result? A society where wealth keeps consolidating upward, and the average family feels stuck in place, the K-shaped economy, a bifurcated market. So while the macro picture looks heavy, there's innovation happening under the surface. In this case, Robinhood. The trading platform that brought millions of young investors into markets now reports 11 different sources of income, From crypto trading to options to credit cards to home loans to retirement accounts. They're evolving from a trading app into a full-scale financial ecosystem. Love or hate Robinhood, this is a sign of a much bigger trend, the decentralization of finance access. You see, people aren't waiting on banks anymore. They're choosing platforms that let them move fast, invest easily, and control their money digitally. And that's the world we're heading into, where financial literacy, discipline, and conviction matter more than ever. And that's why we love Bitcoin on this channel. Because tools can empower you, but only if you know how to use them wisely. So let's connect the dots. First dot, the Supreme Court ruling could reshape trade and policy. Second dot, rising Treasury yields are tightening financial conditions. Third dot, the housing market is becoming generationally unreachable. Fourth dot, platforms like Robinhood are changing how finance operates. It's all connected. When policy and money collide, the people who win are those who understand the game, not those who panic. And that's why we do this show. Not just to chase headlines, but to understand how power moves through money and how you guys can position yourselves with wisdom, patience, and faith. Remember, family, wealth isn't built in hype, it's built in discipline. Bear markets, well, they build believers. So, what do you think? Will the Supreme Court's decision on tariffs spark more inflation or help cool trade wars? Do you see the housing market ever returning to affordability? Or is the era gone for good? Drop your thoughts below. I love hearing your perspectives. And if you got value from today's show, hit that like button. But more than anything, subscribe to this channel. And when you're done with that, share this with someone who follows markets and Bitcoin news just as much as you do. It helps the channel grow and helps us reach more people seeking the truth in finance. Remember, this content is for educational purposes only and not financial advice. Always do your own research and stay informed. Well, that's your daily hodl. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one.